Thank you for joining our Chattanooga Affordable Housing Pilot Program Overview and webinar. In this presentation, we'll go over the basic eligibility terms for a pilot. We'll explain how the pilot program works, and we'll provide an overview of the pilot application. The Affordable Housing Pilot Program is a tax incentive program to encourage mixed income and affordable multi-unit rental development in the city of Chattanooga. PILOT stands for Payment-in-Lieu-of-Taxes. A property's tax bill is reduced with a tax abatement if awarded. The remaining taxes owed consist of a payment in lieu of taxes. The pilot term will be in effect for 15 years. During this time, the committed units must remain affordable in order to maintain the tax abatement, regardless of whether there's a change in ownership. The Tennessee Constitution prevents local governments from directly abating property taxes. However, property owned by the local government is exempt from taxation. Therefore, we are able to create a tax abatement program by titling the program in the name of a local government and then leasing it back to the ultimate user. In Chattanooga, this is done through the Health, Education, and Housing Facilities Board, the HEB. The pilot agreement is the lease between the HEB and the property owner, and a standard template will soon be posted on our website. This lease is transferable between property owners and should not negatively impact resale value of a property or access to financing. So here's how a pilot program works to incentivize affordable housing. Developers consider a project's operating cash flow, income from rent, and their operating expenses to determine if a project is viable. If the developer reduces rent, they're bringing in less revenue, but their expenses do not change. And this throws the cash flow out of balance. But if we reduce the property taxes by a proportional amount to the lost revenue, the cash flow comes back into balance. So, an effective affordable housing pilot grants tax abatement in exchange for affordable units.
So the per unit tax abatement is calculated with a formula that sets the tax abatement to equal the annual rent loss, which is market rent minus affordable rent, plus 2%. And that 2% is the participation incentive. It makes the tax abatement slightly larger than the annual rent loss. It helps to offset the cost of application and compliance reporting. Both the market rent and the affordable rent are based off of numbers provided by HUD, the U.S. Department of Housing and Urban Development, and these numbers are updated annually. The HUD numbers adjust the market rent by zip code, allowing us to tailor the abatement more closely to localized market conditions. Our pilot application materials are updated annually to reflect these HUD numbers, so you should have the information you need. This is the website for the Affordable Housing Pilot, and there's various program materials that can help developers assess whether this program will be useful for their project and to complete the application. The first thing we recommend looking at is the pilot calculator. When you click the link, you'll get it as a Google Sheets file. You need to go to File, Download, Microsoft Excel, and that's going to allow you to edit the calculator and test your project. I've got it open in Excel already. So the pilot calculator looks like this. The first thing I want to show is the pilot rents tab. This is that information from HUD that's being used in our calculations. Here we have the affordable rents. These are the rents based on the area median income, or AMI, and the different percentages of AMI represent different affordability thresholds. These are the rents that you'll be able to charge if you're providing these units. Here are the tenant income limits. We want to make sure that tenants occupying these units are income qualified. And so these are the thresholds for the various AMI buckets, 50, 60, 70, and 80, depending on household size. Now, if tenants are occupying a unit and receive, say, a raise, they're able to go up to 160% of the original qualifying threshold before they are asked to leave the unit. Down here, we have small area fair market rents. This is what we're using in our calculations to represent market rent, but as you can probably tell, the small area fair market rents are not exactly on par with market rate for new construction. We use a 130% multiplier, and you can see that in the formula here, to get to what we're considering market rent, Now, this is not relevant for your project in that you can charge these rents, but this helps you understand what we're taking as a baseline market rent when we're doing the tax abatement calculation. These numbers are updated annually. So stepping over to the pilot calculator, the first step is to put in the zip code. I'm going to use 37404. And you'll notice that the tax abatement schedule populates from the pilot rents tab. And so what's happening is it's taking the quote unquote market rent down here, subtracting the affordable rent, and then multiplying by 102% and 12 months for the year. And that gives you the tax abatement. The formula is here as well. These numbers, the SAFMR multiplier and the pilot incentive, don't change, but we put them in so you can understand how we're calculating the tax abatements. The next step is to plug in your project details. So the total units in my project are 100. The current appraised value is, we'll say, $50,000. And the improvement value is 20 million. This tells me, now for the improvement value, this is an estimate. As part of the process, you'll be meeting with the tax assessor and they're going to give an official determination, but to start, using hard costs gets us pretty close to what you can anticipate the improvement value is going to be once the project's built. That gives you a maximum abatement, the maximum amount of taxes that we have available to abate. We're not able to abate the county school taxes. That's why here you're seeing improvements school taxes. And we're not able to abate the taxes that are already being charged on the property. And that's why we're asking for the current appraised value. So $281,000, that's what we have to go shopping with. And what we have to buy is affordable units. So I'm gonna put in 10 one-bedrooms, and you'll notice a few things have happened. The percent abatement has gone up. That's telling me how much of my $281,000 I've spent, and the number of affordable units. I'm going to keep going, 10 of these, 10 of those, so 20 of those. All right, now we've maxed out the abatement. Now, this doesn't mean we don't want to see those affordable units, but it does mean that there isn't enough tax liability for the city to be paying for them. So you're welcome to provide more affordable units than are allotted within the pilot program. In fact, we would encourage it, but you cannot expect tax abatement beyond the max abatement number. And so you'll see, even though I qualify for 107% abatement over here on the right, it's capped at 100%.
So once you've decided that you're interested in pursuing the pilot program based on how it works for your project financially, we recommend that you take a look at some of these other materials on our website. So now I'm going to go over the components of the pilot application and what you'll need to do to submit a pilot application to the city. The first component is what we call the pilot cover sheet, application cover sheet. This cover sheet, again, outlines the requirements for program eligibility, provides additional information on what will be expected of successful applicants, and gives an overview of the application process. By signing this cover sheet with and submitting with your full application, the applicant is certifying that they have reviewed the terms and conditions of this program and understand requirements of a successful applicant. So the basic program requirements. To be considered for tax abatement through the pilot program, the project must meet the following basic conditions. It must be located within the city of Chattanooga, and the proposed rental, it must be a rental project with a minimum of 10 housing units. The pilot will cover either new construction or substantial renovation projects. Additionally, the applicants must be willing to agree to the following terms. The participant must continue paying the portion of their assessed improvement value due to Hamilton County Schools each year. All committed units shall remain affordable for 15 years of the pilot term, and the participant must understand that projects will return to full taxation after 15 years. However, they are welcome to reapply for an extension of the pilot at the end of that initial 15-year pilot term. Finally, applicants may apply for abatement at any point during the year but must understand that they may need to reapply in the following year if awarded abatements exceed $2 million. The city has placed a cap of pilot awards at $2 million. Again, those applicants receiving low-income housing tax credits will only require final approval from the Health and Education Board, and non-LIHTC projects will require approval from Chattanooga City Council and the HEB. And then finally, of course, with the application fee, all applicants who are 501c3s will be exempt from the City of Chattanooga's $1,500 application fee. However, all applicants will need to pay a closing fee, which can be up to $15,000 to the Health and Education Board. The next section of the application provides more in-depth information on each of these elements of the pilot program, including links to the full program guidelines and the pilot calculator. So the guidelines can be found here, and the link to the pilot calculator can again be found here, as well as on our website. Soon, the website will also provide additional information to answer any questions applicants have regarding affordability terms and compliance under the sample pilot agreement and the Affordable Housing Program Compliance FAQ page. Okay, now I'll go over the requirements for a complete pilot application. Complete applications must include the following components in order to be considered for this program. They must submit this cover page, which is signed with the by the appropriate parties. The application worksheet must be submitted as an Excel, and then all of the required supporting documents must also be provided, as well as the $1,500 application fee for those who are not 501c3s. All of these materials will be uploaded as PDFs to this Affordable Housing Pilot Application Submission Portal. This will just require some basic information and has a space for each of those three components I just mentioned to be uploaded as a PDF. So when an applicant is ready to submit, they will need to submit this cover page, again, signed by the appropriate parties, certifying that the applicant acknowledges they've reviewed the pilot program guidelines and understand and agree to comply with those policies. They have included all of the required application materials, and they acknowledge and agree that the pilot lease agreement and agreement for payments in lieu of taxes will not be executed until they have provided all necessary documents and have received necessary approvals from the required approving entities.
The next component of the application is the workbook. Again, this worksheet should be downloaded from the link on the city website by going to File, Download Microsoft Excel. Flipping to our Excel sheet, this is the first page. So here you see another overview of what my colleague just described. We have the submission form, we have the worksheet, the cover sheet, and then the worksheet, and a list of all the supporting documents. And this should be treated as a checklist. When things are included, mark with an X. And you'll notice throughout this worksheet there are yellow fields. This is indicating that it requires information from the applicant. Anything that is not highlighted in yellow should be left unaltered unless there's a real reason it needs to be altered, in which case the applicant should make note of it and clearly mark it on the application. So moving through this application and the tabs below, the applicant starts by providing details, submits a project narrative that tells us a little bit more about the project, and some project details. With all of these yellow fields, when you see one of these, add in information. The next sheet is a pro forma summary. You'll notice there's no yellow fields here, which means it's pulling information from other parts of the application. The pilot calculator, we went through how this works. And then a full pro forma. So this should be familiar. a unit type, we'll call it the Studio A, has 500 square feet. I'm putting 10 of them in at market rate. Now in this case, we'd like to see what your market rates are. Let's say it's $1,400. And then the unit counts of the affordable units, let's say 7. These error messages tell me if there is a mismatch between the information represented in the pilot calculator and other parts of the application. So if you see those errors, double check your numbers, make sure that they align. Sources and uses, OpEx and financing, you'll notice the property tax line is pulling all the information from the pilot calculator sheet. A 15-year cash flow, which is the duration of the pilot term, and again, the pilot rent schedule for reference. So once you complete this workbook, you've assembled all of your supporting documents in files that are named aligned with the conventions. You go to the submission form, which we pulled up earlier, and you're able to submit your application. If you have any further questions after this webinar, there's an email address provided here in the pilot calculator. Feel free to send questions. We look forward to seeing your applications. Thank you so much.